The clueless Fed is at it again. What's up, everybody? Welcome aboard to Bubba's Daily Update. And Fed minutes, even though they're already a month old, the Fed does it again. They talk very dovish. They look like they're not going to raise rates as many times as we think they are, but they're making one big mistake here. The free markets are taking over the interest rates, and they're going up anyways. Yes, they were down today. The 30-year had a big $1.07 move, and the 10-year had a big move, so bringing rates down. But at the end of the day, interest rates are going to rise, and the Fed is going to get caught behind the 8 ball once again for the 100th time in their history, because they do have a perfect record of failing when it gets time to crunch time, because they can't make the big decision. As we saw Bernanke in 13, and as we're watching right now, they don't know how to make the key decision when it's time to buckle down. And if the economy is as good as everybody says it is, and everything is going as great as everybody says it is, then there's no reason that rates should not be going higher here, and we shouldn't get to some normalcy and allow people that want to invest in a bank instead of putting the money in the stock market should be able to do so. But that is not their agenda, so we will continue to watch them as they work in their own clueless manner, which is exactly what they've done for 105 years. In the meantime, markets had a dramatic turnaround. If you looked at the markets overnight, you saw everything down huge. The Dow was down over 200, S&P was down over 20, the NASDAQ was down 80. The markets are falling apart, and it was going to be, oh my God, the world's going to come to an end. And as the morning went on, the markets kind of came back a little bit. They came back a little bit, and they kind of got down to about 100 lower, and then out came the Fed minutes, and boom, they're off to the races. A little bit of a rip your face off. I think the tip-off was, and I texted this out, and I was actually texting with a friend of mine as well. I said, when the SPUs were down, when the S&P was down about 11 points, I said, these don't look so good. These look like they're going higher, okay? Although we took a gamble trade to the short side, but these looked like they could go, and of course they did, and they took off, and of course the markets closed higher. They closed on their highs. Netflix, a company, went crazy, made all-time new record highs. But at the end of the day, again, it wasn't a total shock. Look, what did we say a week ago? The markets, the downtrend has been broken, and now we're starting to see a trend up, and we broke out of that consolidation. So we pulled right back down to it. 2,700 was the number. It came to 2,704 in the S&P, and the markets took off. So again, I would not even be surprised if we got to new highs before we went lower. We're going lower, but we may go to new highs first, and I wouldn't be surprised whatsoever. It's going to be very quiet tomorrow and even quieter on Friday, and the markets are closed on Monday. So we'll see how it trades out. We're going to stay neutral and observing, looking for opportunity. We'll look at individual equities to go ahead and trade, or individual futures. But oil sold off a little bit, came back. Again, very challenging to get that oil down as we continue to have the fear trade. Again, I'm very comfortable now with being short oil. They had me on the run for a little while, but I think I'm going to be in real good shape here. In fact, I think that oil is going to go even further down than I think it is. I would not take a new short here yet. I would watch, because you're going to have to be prepared. If you do decide to short oil, you got to be prepared to get out. And I would say that the exit point, if you do get in, is if it makes new highs. You have to get out and look for a spot to re-enter. But this is a high-risk trade, but I think it's a high-risk, high-reward trade. And that's what I'd be looking for from my standpoint. In the meantime, bonds, as we said, were higher. Gold was very choppy, but gold looks like it's put on a nice little bottom. So I'd look to be a buyer of gold. I think we're going higher there. I think the dollar, again, our black swan, dollar, 10-year, watch. They're going to both go higher, and eventually it's going to create some major heartburn no matter what the Fed says about their inflation, all their silly targets. In the meantime, you've got the grains, very strong once again. See, this is, again, we've talked about this. Grains were strong. They continue to push higher. The meats were strong. They continue to push higher. They've now broken back above and going to where we think they're going. So all looks pretty good. The only thing that looks a little bit weak here is the Bitcoin had a big sell-off today, back down to about 7,500. Now this is pretty much of a must-hold area if it's going to continue to rally. So we look for this to hold here. But overall, again, let me repeat, we're neutral. We're observing the general markets. Okay, we're looking at oil. We're looking at, at gold. But again, the next couple of days should be excruciatingly quiet. I would not get too involved. I think you can only get yourself into a lot of trouble. Certainly, if you see some major move one way or the other and you want to fade that major move, I have no problem with that. Too far, too fast. But generally, I think you should sit back and enjoy the Memorial Day weekend because I don't see a lot to do and a lot going on. That'll do it for today's Bubba's Daily Update. In the meantime, don't forget about our high school investing program. We're trying to raise some money. Otherwise, we may have to give up the program. But check out the curriculum at highschoolinvesting.com. Also go to Patreon, patreon.com/Bubba Trading if you'd like to help us out. And also don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. Have a great day, everybody. We'll see you back here tomorrow on Bubba's Daily Update. Take care. Have a good day.